Welcome Forex traders, Steve here with tradingforexforprofit.com. We are looking at the Aussie Swiss on the 4-hour time frame this morning. It is Thursday, July 31st, 2014. Okay, I've opened a sell order on this pair last night following this candle right here. Okay, so this is a break check pattern that's formed right here at support, and I'm going to walk you through it. Okay, so here's a bounce establishing a resistance. That resistance does not hold. We push right through there, and you can always tell where a key level is because the market will push through rather forcefully, typically with a large bodied candle as a retest when it breaks a key level, like right here. Here's a bounce. Okay, look what the market does. It pushes through with a large candle. Okay, here's a bounce, push through with a large candle. So this is resistance now acting as support. Broken resistance acts as new support. Okay, so this support level is now tested 1, 2, 3, 4 times, and then it breaks, okay, with a large bodied candle. There's your break. The market then immediately attempts a move back into the range of where it was trading prior to the break and fails. Okay, now if this candle right here does not meet your criteria for a bearish spike candle, which it shouldn't. If you've watched our videos, we like the body to be contained within the 25% of the entire range of the candle. If you're not up to speed on that, review our video on signals, okay, and candle signals. We discuss the valid spike candles as well as engulfing candles and different candles that we look for. Okay, so if this did not meet the criteria, you would have waited on the next candle to confirm it with a close in the direction that you're intending to move, which is what happens right here. We get a lower close, a pullback, which is where I entered right here on this candle. Okay, so as you can see, my profit was almost reached before I was able to even start to roll on the film here. So the target on this trade is going to be the prior bounce low right here to the high here. So somewhere in this range is what I'd like to mark. I'm really targeting this level here, so I want to keep my 2 times profit as much above this as I can. Okay, so the high of this zone, the higher in this zone, the better. The higher within this zone, the better. Okay, so as you can see, why? Because now we might have to experience a little pullback before a move back to the downside. And I think I just missed the profit by probably a pip or less. Okay, so anyway, we're going to pause this, watch as this trade unfolds here today. Okay, just like that, our 2 times profit target has been reached. Actually, we experienced a little bit of a bounce, a little pullback, which scared me somewhat. It almost looked like we were going to move back up and into this range and take my stop before continuing on. However, the market just fell right over and continued on down to a deeper level within this target zone. What I want to recap here is the most important aspect of trading the break check, or any of our patterns for that matter. You establish a level first, and then the action takes place at that level. In this case, we have the break, and then the attempted move back into the zone, which fails. Okay, so there's your fail candle. If you did not enter on that, once again, you wait on the break candle or the following candle to confirm it. Okay, so we almost missed our target here by a pip, and this reinforces why you draw your target zone and you try to keep your 2 times profit target to the extreme edge, outer edge of that. In this case, it would be to the upper edge. Okay, and this is exactly why, because we might have experienced a move on up into this level, taking out our stops before the continuation down. Okay, you just never know. That's why you can say for sure that there's a high probability chance that it's going to retest this level. Okay, so is it going to make it down to this level, which was my initial target? Well, perhaps, but maybe not until we move back up. And that's the market is so capricious. You're going to see that it moves in one direction. However, if you try to get in on trades with stop losses, it's going to target those as it moves. Okay, and then it's going to change, and nobody knows when, and it's going to continue to target stop losses back in the other direction until it's ready to go the other way again. So the sweet spot is 2 times profit target. Keep your stop tight and do that by setting up the trade with the pullback. Okay, and I'll talk about that in other videos, but real quick, you want to remember that you don't chase a trade. Okay, you set it up, you target your target, 2 times target, profit target is strategically placed based on the stop and where you enter. Okay, so I guess what I'm saying overall is don't chase it, don't just enter when you see the signal and the pattern. That's not good enough. The pattern is not complete unless it takes your entry and puts your stop loss, your entry, and your 2 times profit target exactly where you want them. That's when it's complete. Okay, if this would not have pulled back and my target would have had to been below this level somewhere, I would have never taken the entry. Okay, that's the point that I want to drive home. Okay, so just like that, break check, it's a fantastic pattern that forms over and over again in the market. So just watch for it and learn to trade it by watching these videos over and over again. Okay.